365. Shake my hand, man. Hope you're doing well, ma'am. Hope you're doing well, sir. Hope all of you are doing well. Real quick, guys, I just realized I've been dropping video after video on the channel and I keep forgetting to make this clear. Alright, so I just want to make a quick announcement, but I want to show it to you. I just want to show it to you. So I just finished the class and we finished the last class of module 1 tonight. Right, so tonight is the 30th of June. And I thought to myself, this is actually one of the first brilliant classes that I could actually post. The whole class, so not just a snippet, but the entire class, right? So you can understand the questions, see where these people are after doing the course for about 4 weeks. Our module 1 is about 4 weeks. Then module 2 is the quicker version, it's about 2 weeks, the trader's edge, right? How to create a system around supply and demand after you've learned what it actually is. So tonight's class was the end of module 1, and I'm going to share it with you right now. If you just give me 1 more minute of your time, it's literally the full class is just going to play. But I thought I'd quickly just alert you guys on a couple of things. Number one, and I've brought it up a few times, but I always forget in the most recent videos I've dropped, and please do check out the other videos, like, subscribe, all that good stuff, right? But number one, the remote course, the 365 online version of the course, the best version of myself, all my recorded lectures, all of that is going to stay at an all-time low of $100, okay? $100 up until we reach 3,000 subscribers, right? So if you know how YouTube works, that's a big milestone, right? So please take advantage for that. But our live classes, right? Our next and potentially one of the last live classes of the year, right? Could be the last or the second last, like I said last time, is going to start on the 13th of July. So the 13th of July 2021 on a Tuesday night, I'll be starting a whole new intake. I'll have had enough time to complete the group that I'm with right now, make sure they're completely polished. We were meant to start on the 8th of July, but I'm pushing that another week to the 13th, just so I don't rush the students that I'm with right now. And I make sure that they're completely polished before I do another intake, right? On the 13th of July, if you want to take these classes live, 3 to 4 times a week, right? Tuesday, Wednesday, Thursday on week 1, and then 4 times a week from week 2, so forth, up until the course is done. The course is normally 8 weeks, all right? That's also at an all-time new low, right? From $300 to $180. And these promotions, guys, are simply based purely on the fact that I appreciate you guys watching our videos on YouTube, and just want to just show you what we got. So our thing at 365 though for the live classes, right? Quality over quantity, right? So it's first come, first serve. We're not taking in everyone as usual, right? So we will email all of this. If you're already on the waiting list from the previous month, if you couldn't make it because classes filled up, you will get a similar notice just like everyone else. But it's first come, first serve. 13th of July I start our live classes again of our supply and demand course. Early bird registration ends on the 12th of July, so you can start to register between now and the 12th of July, right? You've got 12 days to lock that in. A late registration from the 13th of July till the 15th of July, full fees will apply. So imagine missing out on such a big discount, right? 365, see you on the other side. Peace. Boom. Okay, we're back. So this is what I want to show you quickly, guys. This is exactly what I want to show you as quickly as possible so you guys can experience the full class. So this is what I mean by remote course, right? This is our online course hosted here, embedded through our website, etc., etc., etc. And there it is. So module 1 is our mastering the basics. This takes 4 weeks when being done live, right? So the live classes start on the 13th. This is what we're going to be doing. But obviously, if you're going to the remote course, then you can't come to the live classes, but you have the full course that you can do at your own time. So you'll have a folder similar to this, week 1, week 2, week 3, week 4. We've just finished week 4, like I said. And you just please follow. It's very important. Just follow the way I've kind of like labeled it out for you, right? So in the introductory lecture, module 1, everything is kind of like just laid out for you. Everything's laid out for you. On average, as you can see by the size, each class is about 2 hours, give or take. And then at the end of each week, in each folder, there's a short PDF that I've written right in there that actually summarizes everything that I think you need to know. So I kind of like quickly break down what it is that were the key things to take away from that week, right? So it's actually important to keep track of this particular folder. But yeah, this is what our remote course looks like. I'm on week 2. You can see it's got files, the videos are there. carefully labeled again. You want to go through this stuff the way I've said it out, because it's a very much interloop course, right? So you can see a lot of people are already kind of like in it. And again, go, and then when it's now time for a new folder, you go through a new folder. But I feel like I've taken up so much of your time. Please enjoy the class that we've just done tonight. Don't forget to like, share, subscribe, guys. This massive discount, the live course discount, is only going to happen once. So it's only for the 13th of July, right? Where price will be slashed to $180, right? But the remote course will stay where it is up until we complete our goal of 3,000 subscribers on YouTube, right? Guys, one more time, shake my hand, and I'll see you in the other side of our classroom. Peace. Guys are doing well, like I said. I'll shake my hand as usual, right? I feel like the camera is in my face today. I don't know what these guys did, but I'll leave it as it is. Right, so yesterday we wrapped up multiple time frame analysis by simply just doing more drills, right? Which is really the hallmark of a good trader. David, fantastic, man, fantastic. Which is the hallmark of a good trader. This is kind of like the life you are opting to live by taking this course. Your life is spent more on analysis than trading, right? Why? You want to get to a place where you can find trades. So I've got metrics for everything, you know, and I'm really hoping this year, outside of the course, outside of the curriculum, outside of the mentorship, I can give you guys more things. Like there's some basic stuff that I do every day that I think give me an edge, that have nothing to do with trading, but impact my trading. And one of these things is I like to develop matrix, right? Matrix are measures. So I'll say 10 out of 10 is a good trade. So it's got components that look like this. It's a 10 out of 10 trade. The more analysis you do, and you must do a lot of analysis before you can even consider a trade a good trade, right? Well, what do you mean this is a good trade? What's the criteria for a good trade, right? How do you make that judgment that you know what, this is an excellent trade? You can only do that, in my opinion, if you've gone through the market quite a bit and you've gone through several pairs and you're like, you know what, based on the rules, I've seen 10 opportunities based on the rules, 10 opportunities out of 30 charts that I looked at today. I can confidently say I've seen 10, but reality is it doesn't matter. Why? Because I only have $200 in my account. So I'm screwed. I can't take 10 opportunities. That would be poor risk management. $200 is nothing. It's a small account. I only have $400. Leroy said, yes, no, not really, right? 0.01 for every $100 in your account equals 5% risk. So if you're moving at that rate, remember, for me, the bigger the account over time, the less the risk you take, right? So the less the risk you start to rely on leverage, broker leverage, right? And that's what we're talking about tonight, by the way. We're talking about broker leverage, right? So the bigger the account, I start to dial down. I'm on 3%, I'm on 2%, because I don't need a lot of leverage now because my capital is quite big, all right? So I take a lesser risk, right? Lower risk for potentially good probabilities or higher rewards. But what you want to get to is a place where you are absolutely sure that you've kind of like cast your eyes across the charts, which is why I love doing my analysis on weekends. There are many traders out there who say don't analyze charts during weekends because the markets can gap against you on Monday. And look, man, it's really just based on how you read your charts, right? Of course, markets can gap against you, but all gaps have a particular trend. In fact, gaps in module 2, I'll teach you a significant type of an imbalance. And we know that all imbalances act as PCPs, or potential continuation patterns. They're just letting us know where the banks are going to go. There's a simple way to deal with gaps, right? But if you don't know how to do something, a lot of people shy away from it. But out of the 10 trades that you finally found in 30 charts that you actually took the time to analyze based on your capital, you might only be really trying to sit on 2 to 3. This is more manageable. When you're starting, you guys are literally module 1. You are starting. This is more manageable. Your 2 to 3 charts for the week, right? And you figured something out via MTA, which we did last night, right? You've narrowed down the flow of money. You understand the supply or the demand in control. You can see that for the next week, maybe 2 months, give or take, the long-term picture that this chart is supposed to trend up or down. So why not just track the basic order blocks that support, your perspective? This is just to make sure that you're not running around like a headless chicken in the markets, buying here, selling there, buying here, selling there. And by the end of the month, you can't really tell if it was worth it, right? You made money, but you didn't keep money. You made money, but you did not keep money. And that's dangerous, right? This is a dangerous thing, but it's an absolutely a common thing in forex market, where people make a lot of money and then lose a lot of money. And then they actually don't keep it, right? So I just want to quickly read the question here. Before we proceed, I found an exciting current trade on UK oil, sort of retest, turning point. Mind giving us an in-depth analysis on? Yeah, sure, absolutely. UK oil, fantastic. All right, cool. I've been looking at oil, and I look at oil a lot because I've got a big play to make on CAD, right, or on USD CAD. So maybe, Nancy, let me just start it this way. USD CAD, as you know, is a forex currency. Canada is a very much oil-based economy, right? So if oil goes up, which I think it will, if you follow the fundamentals around oil, I mean, there's one big meeting that we're waiting for, right? But if oil, but anyway, since 2019, right, before COVID, 2019, all those OPEC guys want to get to $100 per barrel, and oil was about 67, 68, 66 bucks the last time I was in a trade in it. I haven't entered oil again since then, but you can tell that there's still a long way to go to get to $100 per barrel. But for oil to go up, there's no ways the USD CAD bull run will last forever, right? It's impossible, right? So if oil does go up, I'll be long on oil while I'm shooting down USD CAD, but I'll be looking for my supply and demand order blocks, right? So stuff like that, right? I don't know when to give you guys such side notes, right? You'll get all my side notes in my book, of course, but it's just nice. So maybe let's go straight to the charts. I was just doing a quick introduction for what we're going to do tonight, but let's see. Let me pull out a chart here for you guys, and thank you for bringing that to my attention, Nancy, and well done for spotting what may or may not be an opportunity, but just getting involved, right now. You guys must just keep getting your feet wet, keep making analysis, keep getting them wrong, getting them right. It's even nicer if you record. So if you record your trades on a journal, I'm still to do that trading journal video, but if you're a simple notebook, like you're biased on this, and you think it's going to go up and it doesn't go up, or it does go up, keep track of that. Keep track of how many times you're right, how many times you're wrong before you go live. And that's important for confidence, right? You actually know that what you're feeling now is nerves, because you're about to trade real money. But outside of the nerves, when you were practicing, this is where you were, right? Outside of the nerves, when you're practicing, this is where you were. And so we're looking at Brent oil, and just let me know if this is correct. You want to know about UK oil. Or did I just go there by myself? So there's crude oil and UK oil. Now you are very clear, UK oil. Right, and this opportunity you're looking at, the retest, what time frame are you referring to?
Monthly.
Okay, fantastic. All right, cool. Brilliant. Right, so let's just start right there. Welcome to Brent oil. And once again, UK oil during the, crude oil at least during the crisis last year went to negatives. Man, if you guys have seen my Facebook videos last year before you joined the academy, I begged the whole world to simply buy oil. It was negatives. It was not that it was $1 or $2. At some point in time, Brent oil stopped at about 15, which was fine. You see, I have that highlighted there. But crude oil, real quick, was literally, imagine buying something at minus, all right? So minus $1, minus, it was a couple of minus cents. It was the most ridiculous thing ever. Brokers refused to take people's money if you wanted to keep selling. So we shut this thing down when COVID came about. Sasol, a South African company, is still bleeding because they failed to hedge last year. They just didn't think this would happen, right? So look at my numbers. So I'm now on 80 something cents, $1, and just at this demand there is about minus 0.27 cents. This thing literally went down. So all you had to do was to understand what was going on, and anything at minus that we still need, just buy a lot of it, right? Because this is all us human beings, price, profits, fuel, supply, demand equation, paying you back, right? Paying you back because of this simple fall in US oil. And then, UK oil, they put a stop to it quicker, and it stopped falling at about $15. But these were like the best low things to buy last year, right? Right, and it was caused by obviously a massive, Russian stuff. Right, so, okay, so I've got this chart marked up here, so that's a little bit unfair. But you are talking about selling. Is that what you're talking about?
Yeah, exactly. Yeah.
I definitely see what you see, and you can see I've kind of like got, a similar idea, or at least I had a similar idea a long time ago. And so naturally, the answer is absolutely, you are right. But I would wait a bit to shoot oil, or you can sell oil. Definitely, it'll sell for a bit on smaller time frames. But I still suspect that there's a plan, right? So let's talk about this. The stuff that me and you haven't done, because we're only finishing module 1 this week, and then we're going to get into module 2. But there's a break-in structure here. And that break-in structure is a design. So what I mean is, as you can see for yourself, price is just going down. Every time it comes up here, it goes down, comes up there, it goes down. Hit this trend line, went down. So this is all of this on the other side of this white line that I just drew is a trend line. It's called a trend line. Everything here is a bearish structure. Right? Price was going down and down and down, bearish structure. But because of how low price went, and not just that, but other fundamentals, we called in a lot of buyers at this low levels of 2020, a significant V-shaped recovery. That's what the market loves, right? Price then rallied all the way up, right? Really pushed up. And then again, like I said, their main target is they want to come back here. Remember, things were good for oil in 2008. And then again in about 2011. And really what they want is to be in a world where oil is sitting at about $100 per barrel. Now, oil is interesting because oil is literally the heartbeat of our trading strategy, supply and demand, right? So I don't know if you guys know this stuff. I've just highlighted this as $100 so you can see the mark. It's going to be at least a higher high if they can get here. They want to go up beyond this level here. Oil is the heartbeat of our strategy, and that's because for price to keep going up, these guys actually have to restrict the supply of oil. So they actually have to slow down the production of oil. They have to cut the production of oil. So though the news releases, the fundamentals, the sentiment is always based on who's creating oil in terms of barrels and who's reducing that. So is Russia going to cut their production by 10,000 barrels of oil? If they restrict that, the oil becomes more scarce, right? The product becomes more valuable because there's not a lot of it. They're actually micromanaging and creating less and less. So it's called a restriction of supply. When you restrict the supply of oil, demand goes up. But if these guys don't agree to restrict the supply of oil, which sometimes they have these debates and arguments and all these petty things that happen in that world, right? And all of a sudden someone wants to just like keep producing oil. Last year, with the black oil flash crash, right? When oil dropped to the negatives, right? It was because Russia didn't want to play ball. They're just not interested. There's an oil war right at the beginning of COVID, right? And remember, oil and COVID, it's a horrible combo because if planes are not flying, people are staying home, there's a less need for oil, right? When you need it, it means you're reducing the demand. So when you restrict or cut down the demand for oil by a global lockdown, no cruise ships, no planes flying around, and then you've got the OPEC, the gurus, the mafia of oil are not wanting to restrict the supply, so they're producing more oil than is needed at the time, right? Prices just kept falling and falling and falling and falling, right? So now we're here. Now, module 1 with where we are in the course right now, absolutely, right? You're absolutely right. We had an original turn. It did wonders. We had our area of competition clearly marked. It did wonders. Our order block clearly intact. It might do wonders. There's a high possibility for a sale here. I see it. I'm just going to quickly go to weekly time frame. Right. This is interesting now. You see. So on the monthly, it almost feels like we're ready to sell. But as we draw that MTA that we keep working on the weekly, we can start to see a couple of things. So we can say here, MS, right? We've got a monthly supply, which is fantastic. We love it. But in the weekly time frame, we don't. So we need confluence. All right. And Nancy, thank you so much for bringing us to this chart, because it kind of like helps, saves me time from doing another review of yesterday's class, and then we keep it there. But there we have a weekly supply at the top. So really, realistically speaking, we might need to get up there. So you know how I kind of like number my zones, so I keep track of what's going on, right? So this is where price is, and price has to deal with this area decisively first, right? And it looks like it has. As far as I can tell, you can see if I was to draw this area of competition on the monthly time frame and adjust it to the weekly, if this was a significant turning point, it's now broken, right? Now, let's draw a counter, right? An immediate. Remember, we're always dealing in the spheres of immediate areas of value when we're tracking these imbalances, right? So I would say this is definitely a place where markets would want to a weekly demand, right? Where markets might decide to kind of like think about, you know, going back up. So there's a push there. I do understand there's a lot of activity down below, but I prefer this. I prefer this. And then we're searching. We can see a couple. I love this one, right? This is actually my monthly demand. I hope you saw it, right, on our governing chart there. MD2. Right, that one I love, and I think that's what you're looking at, right? You're looking to sell and maybe to negotiate this area, but eventually a beautiful sell all the way down there. I must say it'll take a lot, number one, for oil to come back down here, because this is like the south of the plan right now, right? Absolute south of the plan. When is the next OPEC meeting? Let's see. I'm teaching you something cool today, something different. There we go. This is tomorrow. This is big. Oh man, I was probably gonna find out in the morning when my calendar starts exploding at 6 a.m. of what to look out for. So I'm gonna be watching the live stream of this. And we've class tomorrow night. Tomorrow's Thursday, so we can talk about this, you know, what they said, etc., etc. Bearing in mind that I do like trade a bit, so sometimes I kill the distractions. But generally speaking, I never miss an OPEC meeting because they're actually absolutely entertaining. But whatever they decide here tomorrow, let's just see if it's there on the forex factory. I prefer forex factory. I'll teach you all these things. I don't know if you guys use these things, but for me, it's just a nice way, you know, to stay up to date with markets fundamentals. This is the week 1 to tomorrow. You guys can still see the screen, right? I'm not on the charts right now. Right, so I just want 1 July to 1 July. I just want to see right, so if someone could just quickly help me. This is all for currencies anyway, so it actually wouldn't show here. Wouldn't show here. All right, cool. Right, cool. So we'll see tomorrow. I'll live stream this thing. Oh, there we go. OPEC. There we go. All day. So OPEC is going to be the whole day tomorrow. I'm sure there'll be a live stream on Bloomberg. Normally I watch it from Bloomberg, and you can see red. It's a high priority meeting, right? So what will happen here is what's going to move the markets from tomorrow and for the rest of the third financial quarter, if they can agree this weekend, right? So normally these meetings are, you know, a full day, but then sometimes they can roll over. If they can agree to restrict supply, right, and honor the supply or restrict supply in terms of production, and then we might see this, you know, price pushing in. We already know there's a higher place for price to turn, right? There's a weekly supply somewhere inside the monthly supply there, right? We understand this. But if there's disagreements, no clarity, no consciousness, no agreement, you know, then we can start to look for shorts. But right now, when we do our MTA, we are not yet there, you know, unless if this area holds. But for me, it's difficult to trust. Remember, sometimes they can break an area and then use it, right? if I'm to sell with my own money, I would love to sell as high as possible, sell high. So that's where I'm looking to, but your instincts are correct. If I could say that, your instincts are absolutely correct. Right, on the daily, it seems like the daily is already reacting to this area there, which was that monthly area of competition, and on the daily it's falling, right? But again, price has breached that line, and this would be the next place of interest for price on the daily. But there are so many other higher supplies, right, on the daily time frame, right? But the only supplies on the daily time frame with confluence with the weekly, strong MTA is very important, are clearly these two, right? So once again, for me, I'm happy to watch everyone make their money tomorrow, right? So these two areas here, right? The 1, 2. I'm happy for everyone to make their money tomorrow while I stay out of it until, you know, I get the type of entry I believe I deserve, right? So this would be it. But I'm only taking this, and this for me is strategic, right? I don't have to make a rush decision and sell when tomorrow they might actually agree on more supply cuts, right? So this is, if I was to sell on the weekly time frame, on the daily time frame, I would need price to get all the way up there or between these two red lines. Maybe my stop loss can be outside like that. That's perfectly fine. But this is what I'm looking at. And on my governing time frame, this is what I'm looking at. All right, somewhere there. But again, I'm pretty sure. I mean, we are in lockdown level 4, and I'm sure African countries are going through the most. But where they are rolling out vaccines, which is, you know, in the first world, right? We have to remember that for those guys out there, things are good as, you know, back to normal, right? People can go on holidays. You now get a vaccine passport, a vaccine ID or something like that. People are walking around without face masks. That could have a big impact, right? If we're not going through a global lockdown, and it's more just of an African continent situation where countries slowly but surely are starting to experience 3rd and 4th and 5th waves at larger scales, of course, right? Then it might not be a problem, right? So if planes are still flying, blah, 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 you know, then I'm interested to see this area will hold. We've got a fresh touch, a retest should do good. If prices to ever come back all the way down here once again, all the way down here, all the way, where are my tools, man? If prices ever come back all the way down here, something has gone drastically wrong, right? And definitely I'll buy down there, but it will take a lot, right? Because technically speaking, with the trend line that I've just drawn, I don't want to talk about it yet because we haven't done it in class together, right? You can see what's going on. There's a PCP, right? Price is bound to anyways bounce from here. You know, to the very least. This is kind of like the 2021, 2022 trajectory, right? But we'll see. So tomorrow is a good time to kind of like tune into oil, and I'll give you guys a summary of what happened on Friday or Saturday whenever I have time. It's just a summary of OPEC. Nancy, are we okay to leave that there? Can we leave that there for now?
Yes, it's all right.
All right, cool. But I did touch on the technicals that you're looking at, which I think is what's important right now. You know, oil question, right? Cool. So I've made a note, and then I'll update you, you know, when I review what's going on tomorrow. Tomorrow is Thursday, right? Cool. Otherwise, guys, let's get cracking, right? So this served as our usual introduction.
Yeah.
What's up, man?
Sorry to take you back. I have a question.
Yeah.
2 questions. The first one is when you are doing multiple time frame analysis, you have your major turning point monthly demand and your major turning point monthly supply. And then you begin to trickle down to the weekly and the daily. But if you are looking for setups in the daily and the weekly, do those setups specifically have to be in your monthly either in your monthly supply and monthly demand, or you can take them from anywhere along the? I'm not sure if you understand what I mean.
I definitely do. I mean, thank you for that. It's definitely a question I've been waiting for, but I felt like I'd answered it without it being asked, right? But let's redo that again, guys, because that's a very important question. And I'm going to draw a line. So tonight, what I'll do is I'll try and make it as visual as possible so that it's as clear as possible. And if you remind me to take a picture of this, I can, so I can add it to your Google Drive. Sorry, I'm quite a visual human being. This really helps me think. Right, so let's do, so how should we do this? Let's say there are two types. There are two types of multiple time frame analysis, right? Two MTAs. Don't know that it's hot or I'm getting feverish, right? But it was cold last night and it's okay this today. I hate this time, right? There are two multiple time frames. So let's call this one the classic. The classic one, Mr. Kakoma, is what you just asked me about, right? The classic one is what we call, or what I like to call, ultimate confluence. And someone who's reviewing my book as we speak, an economist, said we don't talk about ultimate confluence in markets. Nothing is ever 100%, blah, blah, blah. But I can tell you now that's one thing I'm not taking out of the book, because this is definitely an ultimate confluence. I am absolutely happy with calling it that. And that's because even if you get the trade wrong, it doesn't mean the idea was wrong. It might mean something changed over time. Ultimate confluence looks like this. It looks like what Mr. Kakoma just said. You have a monthly supply, right? Let's just call it a governor. You've got a governing supply here, right? And you know price is about to arrive at your governing supply. So let's give it a green candle. Green means go, right? Right, so price is about to arrive at your governing supply, right? Remember, your governing supply is in charge of governing supply or governing demand, right? The governor is what I'm referring to, positional trading, where the banks are actually looking to use to pivot price for a very, very, very long time. When the banks pivot price for a very, very, very long time, banks create very, 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 very long-term trends. So if you find a governing supply, the idea is, okay, time to sell for a very, 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 very long time. As price is approaching, you are going to start to break this thing down classically, right? So you're going to find the mayoral supply, right, inside your governing supply, which is what Mr. Kakoma is asking, right? If I didn't understand your question, buddy, just stop me and let me know. But it felt like this is what you're asking, and I'm quite excited about it, right? So you've got a weekly supply, and inside your weekly supply, right, for ultimate confluence, in my opinion, right, you want that the logical high that you pick, right, your daily supply is inside like this. So what you have is the meeting of money, you know, the meeting of the minds, you know, confluence, where at some point in time, and we must talk about it properly. We must really talk about it properly, because I want to introduce every single concept to you, you know, in the right manner, in the right time. But there's nothing wrong with introducing this to you right now, because it is the last week of module 1, and then we can expand on it in module 2. We have said before in this course from week 1, price is everything. Price is everything. That means everything that I need to know about price is already kind of like there, but price does more. Prices in everything. So I can look at data today, I can look at the charts today. Today is Wednesday. I can make accurate predictions about what's going to happen on Friday, NFP, and then I can take a trade the day before if I find the right order block, just like we did with the FOMC, right? Similar stuff, because normally we can actually read what price is pricing in. The other way to understand, they say the market's price in the future. The third concept that's very important is price is fractal. Have I taught you guys about fractality? Because I normally bring it up end of module 1, module 2. Can someone just say yes or no? Fractality. Do you guys remember this? Have we covered this yet in the course? Thank you, Trevor. Fantastic. No, we haven't. Good. Let's talk about it. Because once you understand this, I think MTA will sit better. All right, I like it more for the beginning of module 2, but we start module 2 tomorrow. End of module 1 is today, so we're good. So let's quickly go to Google. Let's just borrow, a basic definition of Google. So those are the 3 key principles. Price is everything. Price is in everything. Price is fractal. We trade in supply and demand, and we're roping these things in. Price is everything. Price is in everything. Price is fractal. Fractality, and you'll see, I love stuff like this, right? As long as it's in line with my charts. And where's the thing I like to use? There we go. I love using this image. It's just, you know, is it this one? It's very similar, but I won't waste time. There she is. There we go. There is my girl. Right. So look at this picture, guys. Let me open it up a bit so you can see it better. I want you to focus on the big stuff. So it's like literally the entire image, right? The entire image as it stands. My internet connection is unstable. That's bizarre. Guys, if you see, if there's a problem tonight with power or internet, just let me know. I just got a weird message, right? I don't know why it's failing to open. Right, you see this big image, right? I'm talking about literally the entire thing. If you notice, by the side of it are smaller versions of itself, right? Literal fractals that are literally exactly like made in the same image, essentially, to borrow from the Christian faith. This is literally the same thing representing the whole. Price is fractal. So pretend the whole is your governor. There's a point in time during the day, during the week, at some point in time where the whole will perfectly align with the little ones, right? So that's the golden thread I was talking about earlier on. That's the golden thread where all of a sudden fractality is so perfectly aligned that you've got this confluence, right? So this is what I like playing, and I don't know why it doesn't want to open. Right, so if you can see, the small becomes smaller and smaller and smaller and smaller, but the pattern remains. Doesn't matter how small it is, right? It carries the DNA of its original structure. That is the ultimate type of MTA that you want, the one that Mr. Kakomo was talking about. And this is all I mean by price is fractal, that you can actually see this governor, weekly, daily, H4. And there's a beautiful time in price every now and again where markets goldenly aligned, where the area of value where you're going to enter your trade has this incredible link, right, to higher time frames, incredible, sufficient link that literally money just flows through. Okay, that's number one. So when I say this is where I am looking to start you off on, right, the classic ultimate confluence. I know that my daily sell is going to be difficult for buyers to take me out of the stop loss, because my daily sell has a lot to do with my weekly sell, and my weekly sell has a lot to do with my governing sell and their health. And of course, you can break this down even further. You can go H4, H1. And the reason why we go even lower is to reduce risk. Right, so we want to find, that's supposed to be H1. We want to find that ultimate order block that started the original move, right? There's an order block in the 1 hour time frame that gave birth to the H4 time frame, that gave birth to the daily supply, that gave it blah, 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 blah. And you keep going, and we'll talk about these in module 2. All right, when we start to talk about value-based demands and peak supplies, then there's a specific order block that we want to track inside this whole story, right? So what will price do in a classic ultimate confluence setup? Markets will enter the governor. 9 out of 10 times it'll react like if it's a valid area of value that meets our rules, price will react. All right, it might react, it might pull back, it might not. With EuroCAD, the beautiful sell that I was telling you about, the buy and the sell, price might use a very strong wick to find you, right? To find that area of value like this, so that it knows we are done. We're not coming back for a very long time. We have sucked in the correct order block where the most money was put in. Remember, we don't see what the flow guys are seeing. The flow guys are seeing money come in, money go. Buy here, sell there. We are seeing candlesticks. So it's important that our understanding of our order blocks is valid. How do we choose these order blocks? Option 1 is to look for a classic ultimate confluence, right? This is what D was asking last week as well. But this type of confluence, as much as we like it so much, takes time. So you could be waiting for price to get there for weeks, right? Like I once taught a group last year, and we were doing like reviews. Just before one-on-ones, I do some type of reviews just to check where everyone is, remind them what I'm looking for in the one-on-ones, make sure you're trading in data sets, take 30 trades, take 20 trades, monitor that, make notes that when we review it, it's not like you've taken 1,000 trades and blown your account 1,000 times before you got the necessary corrections that you need, right? So as I was doing those data sets, the feedback before the one-on-ones that this one particular group kept giving me was, man, the stuff works, but it takes forever to find setups. Price takes forever to get to a governing setup. I've been waiting for this thing for 4 weeks, and I might need to wait for another 2 weeks before I can even place a trade. And then I realized that actually the student maybe didn't fully understand what we meant in week 1 and week 2. In week 1 and week 2, we kept dealing about the power of the governor time frame, right? And what the governor does. The governor in the classic ultimate confluence setup, in this setup that we've just discussed right here, the governor is creating a trend. So we're catching the governor in the creation moment, right? We are literally part of a long-term trend. We are in it. If our rules are met, all the rules that we've been speaking about, we are in it. We are literally in it. But there are many times where, like I say it in class, just as an example to make it as realistic as possible, what happens if you took Leroy's class and now when did you guys join? In June. You guys joined in June, I believe, for the live classes, right? Yeah. So you took Leroy's class in June. It's an 8-week course. You're only going to finish sometime in July. Fantastic. By the time you get confident enough to trade and review yourself, maybe you start in August. So let's review the exact same pair, and maybe let me make space here. Right, so let's review the exact same pair on the left-hand side. Let's give this pair a name. Let's call this Euro USD for the fun of it. So in Euro USD, right, there was a classic ultimate confluence setup, which is what we have in front of us. But let's say you start trading in August 2021 after the course, because I said no one trades live if it's your first time anyways, up until I've taught you everything. So finish the full course that you paid for, and then let's get, very, very clear about our approach. So 2021 comes, but now this thing happened in January. Let's say January. So now in your governing time frame, you have something that looks like this. Don't know why that's black, but it's fine. We love black, right? So price moves. Okay, so prices left in January. January, and then this is all February. So February, March, April, just spice things up a bit. May, June, July, right? And July is here. July. Right, and here you are now about to take a trade in the month of August. And your instruction and your teachings say that markets are not random. They move from supply to demand, demand to supply. You just need to find the logical flow of money, and you can then track the trajectory of price, and you understand all of that. So you tell yourself, look, man, price is coming here on my governing time frame, right? There'll be many buy days. There'll be many weeks of counter trend buying, right? And it's all for an opportunity to push price higher so as to sell high. But I'll never be fooled like a retail trader. I understand what's going on. I understand the logic that I'm setting. What do you do, right? This is the much more type of multiple time frame analysis that you actually will be involved in, because I can still find a trade there right now today, even though this is my governing supply. It's all the way up here, my governing supply. Remember, this supply is the same supply this side, same. But now it's August 2021 and price has long left. What am I doing? What do we want to get from our governing supply, our governing time frame? Number one, don't forget, governor, apart from creating a trend, right, determines, right, its path. Remember when we're doing a module 1, week 1, we were tracking buy profile asset, sell profile. This currency is a sell profile asset. So number one, we're determining its path. What does it like to do? Even if it's going against its profile for that period of time, we understand that. The next big concept that I brought in was, please make sure you start to focus more, spend more time focusing on the immediate area of value on all time frames. There will always be a far much more pressing area of value. So prices live in the governing supply, it's left. But is there another one being formed? Is there another one? The price might not even get down there. Will there be another demand somewhere here, right? All these things become a big factor in your decision. Number 3, the next concept that we brought in the course was, remember to always know who is in control, because who is in control determines the money. They are going to put way more money in the direction that they want price to go. We know where they want to go because in the creation of supplies and demands, they create imbalances. When they create imbalances, we know that that's smart money. When we know we were looking at smart money, we want to do what smart money is doing. So when we identify who is in control and we track that it's actually a supply in control, and we track that the next time someone is remotely even in control to challenge the control of a governing supply, it has to be a governing demand. If there's a governing demand here and a governing demand there, the next immediate area is the area that is your full attention, okay? The next immediate area will be here, if that is a valid demand. If we do our homework to get our rules down, then we now know, look, it's fine. I finished the course late in July, but prices left a classic ultimate confluence setup, but it's perfectly fine. There is a lot of money to be made. Price still needs to get to where it was going, right? No weapon formed against this particular direction shall prosper. And because of that, I need to do a specific type of MTA, the one that will be kind of like drilling down. So we start still from the governing perspective. We want to understand what's going on. If they are complicated 365 candles, is there a PCP? Is the supply creating that sell ladder or that buy ladder that we spoke about? You start to do the work where you are. And as you do the work where you are, you start to move back, right? So you're doing the work where you are, but also moving back weekly, daily, H4. And what you're doing is you're looking for an area of value in line with the governor's plan. So it might not be the golden thread, but it's definitely a silver type of situation, which equally works well. Mr. Kakoma, you good, sir?
Yes, but just to be clear, that means we don't necessarily have to look for the setups in the governing time frame, whether it's a supply or demand, isn't it? It means from here where you've written silver, we can look for the setup there and drill down multiple time frame analysis from that point.
Right. And thank you for that question. I'm just going to mute you real quick. So we still have to look at the governor for direction. It might not be so I just want to make sure I understand how you're using those words. So this is a setup, right? This is a classic setup here. Here we are, because the classic setup has been taken, there might be multiple setups, right? This could be a setup. When you do my module 2, I'll tell you that once you see a bearish engulfing candle like this, it's a setup. This is a big setup. So this could happen, right? So the rule with most engulfments is they are a type of imbalance number 2 in our course, right? Markets like to retest these things. So you'll get a push up like that on your governing structure, which means you should be looking here to sell, right? So I don't know if I'm using the term setup the way you are, but there could be a strong supply right there. And so you want to always know basically the entire arena of your chart. But if we're not going for a classic setup like this, right? Here, we're coming for direction first, and then we are starting from where we are to find one. Why don't we do a chart, buddy? Why don't we do a chart? Because I'm pretty sure it'll be very easy for us to find a chart that offers this type of scenario. Are you okay with that? I just don't want to half answer your question or theoretically only deal with the question.
Yes, that would be better.
All right, fantastic, man. Thank you. Right, so let me just quickly find out where we were yesterday. So yesterday on the charts, remember this is our what we trade document. Does anyone remember where we stopped? We did this. Oh my goodness gracious. I really want to skip this. Swiss friend, I hate these pairs so much. I hate them so much. All right, let me just quickly glance at it. And then if it does have what we're looking for, then we'll have no choice but to analyze it. But very good question and thoroughly enjoying this. All right, so let me show you what I can see on Swiss franc. So you guys don't think I'm just running away from this chart. right? So prices at a boring place right now, okay? And remember, this is the one chart that really annoyed me for years, right? This is like been the biggest range for me. I've never seen something so terribly ugly, right? And where prices just stagnant, and it broke down. Maybe trying to make a break to the lower side, and they broke back up now. And we'll see if this holds. But there's not much, because you could probably find a valid supply there, and you'd expect price to drop. So we want something that's already left a significant area of value. Next on our list is gasoline, natural gas. Let's have a look at the natural gas chart. There it is there. It's part of my watch list. That's why I came here. I created a watch list of things that I like. So natural gas, like I said, I was going to do well because of the Biden stuff. It's got very good incentive. But generally speaking, you can see it's at a tough time since about 2008. Natural gas has really struggled. But again, this is becoming slightly much more of an easier trade to take, because you can just look left and you can see remnants of a supply coming up. So let's skip it. It's too easy. Let's look at EuroCAD. Where is EuroCAD now? I think we've done this chart already as well. Can we do this one maybe? But prices is it a demand? Come on, man. This is a pound, Swedish something, Corona, I think, SEK. I'm just following our list, guys. I'm just trying to quickly dial down these assets. Yes, price is halfway. All right, so Mr. Kakoma, let's have a look here, man. Let's have a look here. Right, so I've got this here, where you can see. I'm talking to people who are ending the course, right? So you guys are literally finishing tonight, module 1 at least, and then tomorrow we start on module 2. But you can see that I didn't even waste too much time here, right? I literally just drew stuff there, right? No MTPs, right? Because I'm focused on my immediate areas of value. If I wanted to know where my MTPs are, you can definitely do that. But generally speaking, I'm very much interested. This is disgusting.
Hey,
yeah.
I'm saying a big week. If you are going to draw an area of value.
I'm not even going to waste my time with this, man. There's a massive market crash. I don't know what caused it. Don't know why. But there's no way his price is going to fill this like this. So I'm going to take this logical one here. There. Does that make sense? It's just way too big. It's completely unmanageable, right? This is quite rare. This is really quite rare. But again, you do get massive wicks in Swiss franc pairs, but not like this. This is crazy, and it goes lower and lower. So I'm taking this place here for now. As a trader, I'd first look to see how price deals with this level before making any other decisions to go to the side, to the downside. This is it. But is this the only demand anyways that we need to be concerned about, right? Because remember now, guys, when generating trade ideas, we want to get to that immediate area of value. For example, there's a fresh demand here, right? The price, yeah, pretty much fresh, not caused by anything on the left here, because this is just below, okay? Showing this there. That's a potential place where price could come to. There is a bullish engulfing pattern here, which we'll talk about a bit more in tomorrow's class in module 2, right? Somewhere there. Can you see? So my monthly, there's so many demands for price to break before price can even bother filling this long wick, if it's even gonna be filled. Because that's purely a market crash or something wrong with this broker at the time. That's another thing to watch out for. Anything that's unrealistic, just change broker. So right now I'm doing IDC. Sorry about this. I'm just going to go to Saxo. If both of them have it, then sure, there's a big problem. What's going on here now? What? Okay, I don't even know what's going on with this pair. There's something wrong with this pair and brokers. I'm utterly confused now, right? So let's just go back to the one we're working on, and then we'll come back and investigate this later. Right, so I've got two demands that I've drawn, plus my major turning point demand at the bottom. This has been broken, class effect, price is here now, right? So there's no point in me even drawing this, right? There's nothing I want here. Class effect is telling me that it's not a good idea, just like it was not a good idea there, just like it was not a good idea there because price came into this area of value. The next thing we know, price might even break this. So as far as I know, there's no demand there left, all right? They haven't broke it, but I'm pretty sure they will very soon. So I will not be trying to buy there. Okay, but price is here now in the middle, right? Price is literally in the middle, right here, between this demand and this supply. And I'm trying to make the judgment, where is price going, up or down? All right, and then one person, hopefully by now, has noticed that it might be well worth drawing that as a supply as well. Right, so now the distance between the what we thought were the first areas of values has even, been reduced drastically, because this clearly seemingly is a turning point. Price is dropping, we've got an imbalance, it looks very healthy. Price has turned, price stopped falling somewhere here, so that's fine. Price has gone up, but glass effect, so we know that when price comes back there, it might not be a safe place to take a particular trade. So what do we do? What do you do? What's the decision you're going to do? So now we go back to that list of rules that I said. Who's in charge? Where did price leave? So it seems to me that the last place that price left was not this supply. Remember, we didn't draw the demand because we are not going to take the trade. But realistically speaking, the last time price left an area of value was a demand. True or false, right? Price is still going up. Price still has to arrive at a supply. Let's draw the area of competition on the supply. Maybe we'll see something different, right? So in my opinion, price has not arrived at the area of competition at a supply. So who's in charge? Who's in charge? Demand is in charge, right? So Mr. Kakoma, I'm hoping this practical example is kind of like breathing more life into this thing. A classic MTA. Oh yeah, go ahead, buddy.
Price is leaving, seems to be falling from the supply there.
It seems to be falling from the supply, right? Sorry, man.
It seems to be falling from that supply.
Yeah, and what about this?
Oh, okay, this demand was created and this supply was. So yeah, this supply was created after this demand was already created.
Yes, but the question then is, who's in charge right now? Your audio is a bit off, but just to save time and audio, this demand right now is in control. You are absolutely right. Price is falling from a supply. You're absolutely right. The supply was created after the demand. That criteria doesn't matter too much. What matters is where are the turns and where was the last place that price turned. So if you just go with dates, price was last there on the 3rd of February, 2020, but price was last here on the 1st of January, 2021. January 2020, January 2021.
I understand it now.
Brilliant, sir. Brilliant, sir. And if you also remember our little motto in class, markets think in 3 months, take profits in 1 year in a 10-year plan. A year ago, they were selling. The sellers are taking profits. Where are the sellers taking profits? They're taking profits at a demand. What happens at a demand? You close all your sell positions. You start to push price up. So the person in control, up until there's a change of hands of money, is a demand. And this demand, yes, we've marked it in red because our rules don't want us to take it again, right? We can't take this demand again. Glass effect, it will fail us the next time price comes back, which is interesting because when the next time price comes back, price is coming from a supply. But again, this example is more perfect at hand right now because we can't do a classic ultimate confluent MTA because markets are not inside a governing supply or a strong governing demand. Markets are in between. Markets are on the go. And a lot of the charts that you guys are going to be looking at are already gone. This is my August example that you get here Price has already left that monthly demand that you saw me analyze 8 weeks ago in the course. Now you're by yourself. What you then do is you quickly do what I just did. Figure out who's in control, because whoever is in control has a start and a destination. If they start at a supply, they're going to stop at a demand. But if they're starting at a demand, they got to stop at a supply. And then you tell yourself, okay, price is now in the middle, but I think it still has to continue its path. It still has to go to the supply, because markets after all are not random. So we get this weird big red candle, right? That kind of like, I'm pretty sure scared a lot of people off, which was about 2 months ago in April. And then in June, and in, April, May, and in June. So the June candlestick ends tonight. After our class, there will only be 3 hours left for the month of June. So there is a 99.9% chance that this candlestick will close green. I don't think there's enough action on the daily time frame to turn the whole candlestick red, because tomorrow is the 1st of July. So you can start to see them climbing. And mind you, this red candle today looks like a bearish engulfing pattern, right? Remember, our understanding of supply and demand is because markets prices everything. Okay, so today we can see a bearish engulfing pattern because price is everything. But if we start to think about pricing in the future, pricing in everything, and if you think about it, that we're about to start a new financial quarter, another 3 months, and if we get 3 candles going up for the next 3 months, what do we now have? You see, so now we can track this play, that if I was to jump into a sale from here 4 months from now at the classic ultimate confluence, I wouldn't want to hold myself past this area. I'll stop there, because if they meet my rules and I get an imbalance and volume-based trading and demand is created and the trend is created, then I want to buy here in the future. So then therefore this becomes a demand 1, right? Because it's the most recent, it's the next place where price is going to land, right? So all of a sudden, this they knew they were about to break. Glass effect was at hand here, and it doesn't seem like they have any interest in coming back to it if they create this for the next 3 months. And so in future, if I sell, I stop there. But let's deal with the actual problem at hand here, because we haven't had confirmation if that's an area. The issue at hand is I need to jump into this trade this week, this month, right? And price is here right now. So I start going left. Okay, all right. This is interesting. It's quite scary actually, because now I feel like we're in no man's land. So I've dropped to the weekly time frame, and you can see that red candle there is actually, even on the monthly, you can see it's a significantly bearish engulfing pattern. So now, I know that, in charge is a demand. My governor is definitely a demand, pushing price up as high as they can. But on the weekly, there's a roadblock, there's a speed hump, right? A slowdown. And actually, price has been at that slowdown since the 14th of June. Price entered, went red, and now we're green. And I'm saying this is the week, this is the last week of this thing, right? From tomorrow onwards, tomorrow is the 1st of July anyways, so this week might end green as well. If this week ends green tomorrow, tonight, midnight, and if you consider this as I would a Talitha area, would you not consider that a Talitha area? Those 3 candles there, right? And you have to ask yourself, what's going on? Why is there a Talitha area just underneath the supply, right? And what is this Talitha area doing? Right? What pattern is it continuing? Why would they start to buy just under there, right? It's suicidal for retail traders to even consider buying this close to a supply, right? Because retail traders do not have the power to remove a supply or a demand. It's their supply. They're going to remove it if they don't want it in the way, number 1. Number 2, what I like about the scenario is if I look left, there's nothing else stopping me. If this is to break, there's absolutely nothing else, nothing. I mean, they've got a good run now, right? Price will run right up until somewhere here now. So the first red line, okay, wrong tool. Let's put out a rectangle here. Guys, stop me if I'm not making sense. This is easier. It's easier to learn right now in class than from the markets taking your money. Please, 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 please. I love questions. I can create more extra classes if we don't finish on time with the syllabus. I don't care about that. What I care about is well-rounded understanding, right? So there it is there. So let's start to talk to ourselves here in our notes. We've got weekly supply 1. And hey, there's confluence. My weekly supply is inside that monthly supply that we drew, monthly supply 1. Right, so that's good confluence, right? Governor and mayor are on the same page, right? They're literally on the same page, right? So I've got this weekly 1 and monthly 1, right? So now look at price. I'm still thinking, where's price coming from? Who's in control, right? There's some crazy buying up here. Then there's a slowing down. I haven't taught you this. We'll do tools together in module 2, but let me just quickly cheat, right? Let me just quickly cheat for my own interest in this asset in case I want to actually trade it, right? So it took that 50% level for retail traders, fine, right? So it's not really the best discount that I want something better, but then price is there. So I accept that we've got a Talitha area here, prices by a weekly supply in the middle, right, of going up, right? So it's just a temporary slowdown, or price could really get rejected. Now I'm on my daily time frame. Now I'm starting to see now. All right, so inside weekly supply 1, where are my notes? Didn't I make notes here? Weekly supply 1. Oh, I made this weekly supply 1. This is actually weekly supply 2. And remember, my numbers are based on where will price get to, right, in the order. So this will be the second weekly supply price gets to up there with monthly supply 1. Weekly supply is here based on that bearish engulfing pattern. Weekly supply 1. I hope that makes sense to everyone. This is my weekly supply 1. 1 because it's the immediate area, right? 1, 2. So the more 3, 4, 5 means they are further. 1, I give 1 to the immediate, and I work on that simple chronological order just to keep my mind at ease. So now inside weekly supply 1, I found daily supply. Daily supply 1. This is the first time price will engage in a strong supply that I might have to consider, right? And it doesn't mean I have to take the trade, because my governor is technically buying from my analysis, but it simply means I must consider where I am. And yesterday when we were talking, and Sanele, I don't think he's with us tonight, but Sanele asked an important question last night. He said, look, man, do I have to think about these smaller areas if I'm going to swing trade, into the bigger areas of value? Is there even a point in worrying, right? In worrying about, a daily supply when my target is the weekly? And my answer was absolutely. At this level, while you're working on your psychology, what it takes a lot of discipline to hold, trades, guys. It looks cool when I post my results, but I promise you, it's a lot of work to hold trades. There's that Talitha area that we saw there. We can see now that there's some type of volume-based buying. Price reacted to it. Price is now trading sideways to it. Price could break to the downside. Price could go back up, etc. But if it does go back up, I'm just going to borrow this rectangle here and make it yellow. You see what I'm doing? I'm breaking price down from where it is. So this could be a potential, roadblock. I won't really call it a supply because I don't like it. It's not as clean as I would want it to be. But I'm going to note it. I'm going to say, look, note to self, there's something weird there, something fishy going on there. But if price does to break out, right, is there a demand that could handle that on the daily? This one seems to be overworked. This one seems to be slightly weak. If you draw it like that, you could 1, 2. You don't have the strong setup. This one seems to be completely overworked, right? So if a sell was to really happen, if this is truly a new sell trend going against what the governor is doing for now, then I'm looking to reconsider, to reassess price somewhere there, right? So I'm saying, okay, fine, price will drop somewhere here. Can I find confluence? Can I confirm this with confluence? Going back to my mayoral time frame. Okay. Then I'm looking at okay, then I'm like, okay, this is my mayoral time frame. I don't like that, no confluence, but I like this. I like that doji candle there. I like that confluence. Is there something here that would make sense to me right there? Right? If price were to come back for a big discount to buy low again, there's something just above this confluence that I could use. Going back to the daily. All right. So it's still the same place that we drew earlier on. We've just narrowed it down a little bit better, right? So price could start to react all over there, or price could simply choose this lower area there, which would make more logical sense. Buy low, sell high, right? So I would have a pending order outside here with a stop loss and a lower lot size out here. Okay, let me just show you how I do it. Not telling you what to do for your accounts. If I was to take this trade out of 2 orders, buy one is this big, all right? Buy one is this big. And what I'm gonna do, because it's this big, it's literally swallowing, about 200 or so pips. No, that's actually quite a lot, right? But because it's this big, right? Literally because it is this big, I am simply gonna reduce the lot size to allow for me to be, well balanced. So instead of using a big 5% lot size, I'll use a 1% lot size to swallow the entire area, right? So if I dial down the lot size, I get, to play around with these levels perfectly. And then I'll have another 5%, risk, because this area is far much more smaller, far much more manageable. So buy 2 will be here, right? And this is obviously my lower buy, right? And my stop loss for buy 2 will also be outside there. So what happens now with price is up to price. I am now more than prepared for this, literally cutting that area of value in half, which is perfect, right? So now I can dial up my lot size 5% though, dial up within 5%, because the exposure of pips has been cut to half, right? If price enters here, if this is a sell, we'll talk about what I think it is later on, but I'm simply saying from a specific of analysis, price falls and triggers me here, it will go with me. But if price falls deeply and triggers this one, it still gets to go with me. All right. It's just that I have to be patient during this deeper trigger. Okay. That's all it means. But price does have a tendency to seek out a lower buy or a higher sell. I've always said if you've got 2 areas of value close to each other, choose the one that's going to be in line with price and also in line with supply and demand logic, buy low, sell high. Okay, so I've painted out all these scenarios, but I still know that my demand is in charge. So I definitely want to be buying down here. If they are selling for whatever reasons, I don't want to interfere with them. Sell all you want, try and push price down there. If they don't push price down there, then we'll wait for them to get to very much more clearer supplies and we can sell with them to the next relevant daily demand, right? And then buy daily demand for a long type of swing. All of this type of MTA is simply done on the basis of where price is now, but with the understanding of where markets are going according to my governor. Mr. Kakoma, satisfied?
Yes, thank you.
Fantastic. All right, cool, guys. Thank you for that. Hopefully everyone is clear there. Hopefully everyone is clear there. So if we don't mind, and luckily enough, tonight's stuff is like you've already had the PDFs. I emailed you guys the PDFs long time ago. It's really nothing intense. We might even finish on time, if not on time earlier. Right, it's the last stuff that I simply need to bring to your guys' attention, right? And this is just the stuff that you will find everywhere else on the internet that no one else really, the stuff that people peddle as an actual course on trading, right? How to calculate pips and a PDF on this and that. But I want to approach this from a deeper level. So let's in the next 40 minutes that we have, talk about brokers and leverage. Because those 2 things go hand in hand, right? Brokers and leverage. And then we are done with module 1. Unfortunately, there's no spring break for you. Tomorrow, please, we come back for class, we start on module 2, right? So that we can finish and start trading, right? So let's talk about brokers and leverage. And everything that I'm about to say tonight is really based on the fact that I believe in my heart that you guys understand what we've done together for the last 4 to 5 weeks, 4 weeks, actually 4 weeks. All right. You actually have been following the 5 types of supply and demand. You've been following market structure, market flow. We've been following the knitting of fundamentals, how prices, everything, how we can simply use that to assess where price is going to turn and maximize on that. Why we don't wait for the type of retail trader confirmations, right? Which is letting price first drop before deciding that, yeah, it's time to sell and trying to sell here because it's technically selling low, right? And the same for buys, right? We understand where price is going to sell before they sell, because bankers trade, plan ahead, right? There are order blocks that we can use to make that decision. So we are selling and buying inside the creation of those trends and not after the trends have happened. Because we know for a fact that the trend is absolutely your friend until the bend, right? And when the trend gets to the bend, it's not your friend, it moves against you. So our job is to learn to anticipate this more than to focus on this, right? If you focus on this only, you're going to run into serious problems. So all of this that I'm about to say tonight is simply based on the basics being fully covered, questions on all the basics fully explained, fully answered, and I'm assuming you guys are good. You're really good to go. So let's, if that's the case, let's talk about brokers and leverage, guys. Brokers are technically supposed to kind of like act as your business partner in trading. All right, that's one way. I still want to maintain this, I guess, positive, optimistic perception of brokers, that they're technically your business partner. Now, not everyone can be your business partner. If you start a business, you will do a good job of choosing a business partner. I'm hoping your business partner will be someone you trust. Your business partner will be someone you value, their ethical behavior, the capital, the resources that they bring. Whatever it is that you like about your business partner, that's what you're going to kind of like, focus on, okay? When it comes to your business partner. This camera is so off today. That's what was wrong with the, sorry, it's just been bothering me all day. In the previous chart, what would be the exact cause of the Talitha area that occurred immediately below the main determining point supply, given that all were all cognizant that it was a dangerous move? In the previous chart, what was the previous chart again? That pound thing. All right. Okay, I think I get your question. Sorry, I'll come back to this broker stuff, but there's a question on the chart there. Let's address it. So the question is, Sheila, just let me know. If you're more than welcome to jump on the mic if you want, but I'm just trying to figure out, you are talking about this potential Talitha area?
Yes.
That one there, right? And is it, let's see on the weekly, because I think it to be clear on the weekly. Right, and then the weekly broke out to the upside. Yeah, okay, cool. So it's not the best Talitha area number one, right? Because we might see months later there might be a stronger imbalance, and we'll realize there was a 365 candle and blah blah blah, and the demand is this big. But for now, yes, we can vaguely call it a Talitha area, and the reason for that is this was an area of contention, Sheila, right? Markets are leaving, demand after demand. I'm just going to draw them in white to save time, right? Demand after demand, so to speak, and they're about to arrive at a significant type of supply. And so that price doesn't run out of steam, right? Steam number one, they're going to consolidate a little bit here. And you can see on the weekly time frame, it was not for a little bit. On the weekly time frame, it felt like forever, right? Before price made a decision. Look at this. Let me draw it. So on the weekly time frame, we can actually see them think through their next move carefully. Right, this red block here, 1, 2, 3, 4, 5, 6, 7 to 8 weeks of consolidations, right? That's about a good 2 months and barely ready to break out of that particular area of value right there. This is just to gather enough power. Remember, my bias is demands are in control. If demands are in control, we're going up, and that's what they want to do. So they are finding a way to start to prepare, consolidate, to range is to do that, right? To gather enough power to push forward, number one. Number two, I've told you a couple of times in the course before that price will never just shoot straight up or shoot straight down. It would make things too easy or just cause crashes all the time. So what markets do is they move in our zigzag. So there's the first zig, there's the zag, right? And now we're hoping for a full-time Z. And what you wanted to know is to be in a place in your life where you can perfectly time this. And if I use the Fibonacci and I take it from our good friend down here and draw it all the way up there, you can see price stop at a golden ratio, which I'm sure you guys don't know what that is, but when you rewatch this video, after I teach you Fib in module 2, you'll be like, oh, it made sense. This was a retracement zone, right? So everyone who bought low, Sheila, is taking profits here. When they're done taking profits here, right, they get ready to buy again, right? Because remember, these guys literally will follow the law of supply and demand to the T. They would absolutely, far much more rather, pull back, push price down so as to buy low here versus buying high there, right? So now that they've reduced how high they were supposed to buy, they can then continue pushing price up. So when you identify a Talitha area, a PCP of any sort, it's absolutely imperative that you understand which area of value is in control. Because if you get that right, your PCP will then tell you whose pattern they're continuing. And if you can get the pattern correct, then you will know where price is going. Sheila, do you feel answered?
Yes, thank you.
Absolute pleasure, ma'am, and thank you for the question. Fantastic. Right. So before the question, and I'm happy for questions. I love questions. And that's why I feel like it's dangerous to be in a rush to sell there right now, because we're not at a governing supply and we're sitting on top of a demand PCP. That's the dangerous part about it, right? So to go back to what I was saying earlier on, brokers are meant to be our business partners, right? Your broker is the person you are going to open an account with. You're not going to open an account with 365 Trading Academy. I will not be trading for you. I don't want to trade for you. We don't trade for people, by the way, unless you're a registered licensed corporation and you meet some criteria. It's quite weird. We actually interview companies. They don't interview us. It's the opposite. So I'm very picky with which companies I like. We really much focused on need-based companies. So NGOs need a lot of money, right? And with COVID, that grant system is dried up. So why not NGOs that are busy doing good things? They must attach themselves to consistent, profitable, registered trading companies, right? I know it's just an idea I'm playing around with in Africa, etc. Universities need third financial income stream. So that's what I kind of like do during the day. But a broker is the person you're going to open your account with. A broker is the person you're going to deposit money in, and trust that when you deposit money in, they will give you access to live market conditions, and you can buy or sell, and you can keep your profits and grow your capital and withdraw your profits whenever you want from that particular account. So your broker is someone that you absolutely need to say you trust, because there's going to be, a lot of expectation on this broker to kind of like, meet your needs. But there are two types of brokers, right? So there's a dealing broker. You guys should have these notes already. Dealing broker, right? Their principle is in market making, right? These guys are market makers. They're literally built for that. That's what they do. That's generally their bread and butter, their ABC, right? So when you are trading with a dealing broker, it's absolutely important, right, that you understand that you might have a broker who is a market maker, right? This particular broker is a participant, right, in the exchange, right? So they also buy and sell, just like you, right, for its own account, right? And normally, generally speaking, when done well, if I'm not mistaken, even when I was a floor trader, dealing brokers should also be using the prices they display, right? So they should be using the exact same, trading numbers, those 1 comma what, they should be taking them. But their primary goal of profiting is based on the bid and ask price, right? Which is the amount in which prices exceed bid and price. So you'll see when you're trading, there'll be these two lines. So it's not that important, but that's what a market maker is. But what I want you to take from what I've just said is this broker is live in the market with you. This broker is trading in the market with you. Be careful if you're selling and your broker thinks it's time to buy, because this broker could easily, your broker could easily be on the other side of the trade with you. All right, so your broker could potentially be trading against you. Simple. They are literally a market maker. They're active. They are literally active. It's a liquidity provider, right? They're literally, moving with price the way you are. And dealing brokers legally are allowed to take trades against you. So if you have a tendency of selling the wrong thing all the time, buying the wrong thing all the time, it's a basic algorithm that makes up for who you are. It gives you your trader's identity. And if your trader's identity after 3 months tells your broker that you only win 10% of your trades, you are most likely wrong 90% of the time. Every time you open a buy, there's a high chance that you're wrong. Someone will just open a sell. Simple. Right? And you open it up buy with $200, someone's opening a sell with 200,000. Who's going to win? Okay. So dealing brokers, right? And this example here is slightly exaggerated, but generally speaking, that's how it is, right? If you follow South African cases, forex cases, it gets even worse. So if you go to the internet right now in South Africa and you Google, you just say JP Markets, which was a broker here that's been liquidated, shut down by the FSC and the courts. Thank God for that, right? JP Markets was the downright, a primary example, and I'm happy to say this publicly, of an absolute nonsense broker. Like it was the definition of a scam. But these guys took this dealing broker nonsense too far. They even went further by actually making sure. So when I place a trade, so this is what's supposed to happen, right? When I analyze my chart and I want to place a trade, I'm supposed to come here. This is Leroy. And I'm going to place a trade into my broker system. There's my broker there. My broker is my business partner, right? So my business partner is meant to really be on my side and do no harm to me. So I'm trying to place a trade, and then my broker is going to charge me, the cost of doing business, of basically linking me into the market space, right? So this is eventually where I want to be, into the market space. Put that heart there, right? So that's the market space there. Right, so this is just a journey, right? So I place a trade into the exchange. My broker makes sure my trades get to the exchange so that I can benefit from the trading, right? The exchange. JP Markets did the worst thing ever, guys. The court case is well written, the evidence based. They did the basic stuff. Basic scammers. They steal your money. You don't allow you to withdraw your money. You invested in Bitcoin. They disappear with your money. That's just a basic scam, right? These guys did something even worse. They created what was known as toxic market conditions. For the people who were so good at trading, they tried their best to create harmful market conditions. For some people who were terrible at trading, right, and those people lose consistently, constant losers, they were not even allowed to enter the actual market space. They just didn't know that. So people were actually trading, basically the back end of a broker system, right? So they were not actually being filled. They're not being filled in the market space, right? So you're looking at your brokerage platform, right? And it's nice to use TradeView because you can actually compare what other brokers are doing. I've forgotten who it was yesterday. Was it Mr. Kakoma or someone, or Trevor, one of the two, who said, look, man, I saw a 365 candle on this broker. I don't see it on this broker. What's going on, right? It's nice to once in a while just glance, right? But I will tell you the top brokers that I use that I have no problems with, and I merely recommend them as a starting place while you do your own research, right? It's a framework for what a good broker should look like. But a bad broker, this is it. Absolute scam, right? Big problems here. Okay, so a dealing broker by design, though, as long as we are aware, as long as they're not doing this thing that JP Markets did, a dealing broker is legally allowed to trade live markets as well. And just so you know, if you're wrong, just understanding that way, that if you're selling and you're wrong, they're most likely buying against you. All right, and they know your position. It's your broker. Your broker, it's just not a secret to your broker. Your broker knows you opened a sell at 9 a.m. at 0.03 on Euro USD. Your broker knows this. And as the market participant, all right, if they decide actually that's supposed to be a buy versus a sell, they're also going to go buy there against you. So remember, I tell you this all the time. If I want to buy something from someone, if I want to buy it, I need someone to be willing to sell it, because I can only buy something if someone is selling, and I can only sell something if someone is buying, right? So you don't want to be caught up on the wrong side of that particular trade. But it's not to say what they're doing is illegal, right? There's a legal way to do this, to actually trade against your client, which is weird. And for me, sounds like conflict of interest, but that's just how it is, right? The second type of broker that you need to be aware of, or the second type of broker at least that exists, let's remove all of this, is basically a non-dealing broker. So basically the opposite, non-dealing broker. And these guys just simply act as that link, right? That link that I told you about. They simply connect you to your lover, right? They take you straight from your MT4 to your phone into the market space. So this is you right there. You're now a little square. This is your broker right here. And all your broker does is act as a link right between the market and the client, and in return they make their money differently, right? So they'll charge you commission. There'll be light spreads, high spreads, fixed spreads, raw spreads, swap charges, right? They're the basic cost of running a forex business, right? Which is normal and fine. That is what a non-dealing broker does. So legally, they will not be opening trades or participating necessarily in the markets or trying to compete with you. All right. So now brokers, both non-dealing and dealing, have a tendency to separate retail traders. You got to manage your client base. Brokers have millions and millions of traders trading millions and millions and millions of dollars, whether it's losses or wins, right? It's a lot of work. So you got to have a system that organizes your traders. And generally speaking, we call them books, right? So this is all old school terminology, books, because that's how it started, right? Now there are 3 types of books, which means there are 3 types of traders in the eyes of brokers, right? This is generally speaking the mindset of all brokers. And we all generally fluctuate between book to book. And then over time, we all eventually end up in one specific book, all right? So some of us start off in one book, end up in another, then go back to another, market conditions have cycles, etc., etc. Well, it's just a different case for everybody. But a lot of retail traders do end up in a very specific book. I want to start with what I classify as book A. So this is just so you understand all 3 types of books. Book A is quite a simple book. Book A is also got a very short list. Book A is for people who are a category of traders who have become very good, consistent, right? They're consistent traders. They literally have more wins than losses on a consistent basis. This is the good trader section, right? So brokers are not necessarily interested not interested. They just want to know who their good traders are. Let me just leave that there. No, not to confuse anyone, right? That's book A. You want to get to book A. You are going to get to book A. Where is this? Okay, maybe because I haven't done the video yet for the private group, but don't forget your affirmations as a trader, absolutely important, right? You want to go to book A, right? You want to become a consistent, profitable trader. Book B, which also with your broker is a different type of group. It's really the type of group where we all start. It's also the type of group where has the most traders, the most, guys. Remember the basic principle, 90%. And this is Googleable. This is a Googleable fact. 90% of retail traders will lose 90% of their capital in the first 90 days of trading. And this is not a once-off thing. It's a cycle. Then if they start another account, they start another 90% of retail traders who will lose 90% of their trading. And it goes on. It goes on and 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 on. And this is because of misinformation, poor market practice, terrible discipline, terrible trading psychology, silly strategies, indicators, a whole list of things out there that cause this, but also the fact that markets are not fair. Markets are completely manipulated. The markets are not designed for the average human being. You need to become a trader. I'll teach you this stuff in module 2. When I trade, it's not Leroy trading. It's the evolved version of myself that is called disciplined trader, right? That's why I gave you that book to read from the jump. You have to become a trader. You can't take who you are now into the markets. Who you are now into the markets is a waste of time. Who you are into the market is going to be the main reason you end up in book B. A trader is extremely organized. A trader is rule-based. A trader understands their basics, their rules. A trader is patient. They know what their setups are, right? Leroy, as the individual, might not be one of those things. I might not be a patient person outside. When it comes to trading, I have to learn to be patient. I have to discipline myself to it because I don't want to spend another day in book B. I'll never know, but according to me, I think I spent anywhere between 3 years to 3.5 years inside book B, right? So that's my terrible, interesting journey story, right? And these are traders who are not doing well in the market. They blow accounts. They're always losing. The main characteristic here is consistency, right? They are consistent in losing, right? And in book A, consistent profits, right? So they do lose here and there, but generally speaking, on a scale of average, there's some consistency. So you want to try to make sure you navigate out of this book as quickly as possible. It's a natural place to start. I'm hoping my course has provided you with all the information to avoid that, right? So what you want, the really normal place where you want to start after a 365 course is the hybrid book. Right, this is the type of traders here are 50-50. It's neither here nor there. I have good days, I have bad days. I can see growth. I destroyed my 2 weeks of profits. I made a blunder, I made a mistake, and I've erased those profits. I gotta go back there and remake that money without revenge trading, of course, right? So this is the hybrid book. It's the group that when you take out my FX book graph, it looks like this, right? It's like, yeah, man, like, okay, dude, you have waves, right? But hopefully you're waving upwards versus waving downwards. I hope you guys can see what I'm saying here, right? That is a trader's pattern. Eventually, like you got $100 here, and then all of a sudden you lost it. Now it's 18, then it goes down, then it comes back up, etc. Right, so these are the 3 books that your broker will automatically keep filing you in based on your data. The more you take, the more you trade, right? The more trades you take, the much more clearer picture they have of who you are and which book you belong to. Brokers. I like specific brokers, which we'll speak about a lot, with time. I do know that it's become very difficult for people in South Africa to enter IG markets. I don't know why, but I've heard that from different people, right? But I like IG markets, a lot of markets to trade. I like brokers where I can open a stock market, open foreign currencies, open indices, open this all on one platform. So I don't have to have 10,000 accounts, and I can use that creatively to hedge myself. So if currencies are falling, we'll see what happens on Friday. If the dollar falls, tech is gonna fly. If tech is flying, I want to be selling my currencies while hedging myself to the buy because I understand market correlation. I like brokers like that who do a good job. So IG markets for me is always at the top because of that, right? IG markets. Number 2, IC markets. Why? Because they're a non-dealing broker, right? They ENC or ECN. I always mess that up, but it's basically that. They're a non-dealing broker. I'm happy for that. I truly want to make sure that if I'm building big accounts, I prefer, as a preference, you don't have to do it, but as a preference, I prefer to build accounts with non-dealing brokers. I just want to quickly double check broker number 3 for you if it's a non-dealing broker. Let's see, but I'll explain why I use them, right? And I think they do. ANC broker list. Okay, this might take time to do during a class, so I'll come back to this. Okay, maybe it's opening. All right, now that's like a weird link that looped me to another weird link, right? It says AvaTrade, over here, account, right? So the next one is not a non-dealing broker, but for our trading strategy, and it's quite a fair broker. I've been with them for a very long time. For our trading strategy, the way they print candles. Remember, yesterday we were talking about printing candles, filling orders, filled orders. The way they handle the filled orders, they print for our type of supply and demand all our order blocks. Remember yesterday, Mr. Kokomo, Mr. Trevor, one of the two order blocks. I had that question like, dude, I can see a 365 candle here, but I can't see it there. You'll never have that problem with arbitrate. They'll print everything. I've done a back test. I've done a comparison for a while, and arbitrate prints everything, right? So I like that about them. I've never had a problem with them. I withdraw in time, etc., etc. Do your own research, but definitely it's going to make it into my top 3. I use a lot of this one, FXCM. It's not necessarily a recommendation, but I use it a lot because I can link it to TradeView, right? So that's awesome. And then number 5, although I have to collapse the account, Wonder, right? I opened the account last year to test a lot of things, etc., etc. Now I want to withdraw everything and then add on different accounts to capacitate other accounts, right? You will tell from the jump that I generally do not have local brokers here. And there's a reason for that. Unfortunately for me, I have not seen a local broker, rise up to a level of regulation that I'm absolutely happy with to recommend, happy with to trade with, right? So maybe there's still a lot of growth that needs to happen on our side of the continent, but until then, there's no point in me risking money out of some false deluded sense of patriotism, right? It's never going to happen. That's why companies like JP Markets happen, you know, because people just want to trade something that seemingly looks like it belongs to them when it's not, right? You want heavily regulated brokers, the more regulated, the better, right? Even IG Markets even struggles to give people the type of leverage they want to dream about. IC Markets reduced some type of leverage settings. It was just last year, I think. All right, so you want to be heavily regulated brokers, right? And then for crypto, I use the biggest, crypto platform in the world, which is Binance, right? Because of its reputation, but I've got a lot of places, and I'm also big on Coinbase. I have used, and my mind is going blank, but I'll send you a whole list here. But essentially, this is where I play. Right, I'm happy with these business partners, so to speak. Right, I'm happy with these business partners. There we go. Alt-Trade Coin. They're quite expensive in terms of transactions. Alt-Trade Coin, but then if people coming from a place like Luno, there's not a lot of alternatives outside the main coins, and these 3 definitely do a good job. You can do trading here and investing, right? And then these 2 you can do a lot of investing, right? So you want to have a system. So when I'm trading crypto to buy coins, I make sure that my Binance coin is loaded and I trade it, supply and demand the way I do, and then I take the profits and I split the profits into wallets, right? So that's my system, simple. And I keep it simple like that. And then when I'm trading my currencies, I do the same thing. And then I have a withdrawal process. I pay myself once every financial quarter, like the banks, right? So I make sure I'm organized financially, blah, blah, blah. And then 20% goes to my pocket. 30% I send to stocks, 30% of profits I send to crypto, and then the rest I leave in the account so that my capital keeps growing, right? But you'll find your own way. You'll find your own path of what makes sense to you. By the way, I can only do this now because I've been profitable for a very long time, right? You can't do this. You can't start off like this when you only got $100. This is your seed money. Traders, avoid that social media nonsense, right? That you want to withdraw for fun and go buy ice cream and show people you're a trader. Money makes money. You understand what I'm saying? This makes this, nothing else. That makes this. And then we start to talk about compounding, making this. There's nothing else in the world that makes money than money, right? I mean, obviously, from a social scientific perspective, it's labor that makes money, which will be you doing all the thinking and the hard work. But I'm saying, be careful not to eat the golden egg, sorry, not to eat the goose, right? And sacrifice losing out on the golden eggs in the future, right? I'm telling you, a process of someone who's been doing this for 8 years. It was never like this for me. I did everything wrong. I used to trade under pressure, trade for bills, You have to grow your seed, right? You have to grow it. You have to treat your capital. So that's why I keep telling you guys, for the first 3 to 6 months, you think I'm joking. No, play defensive, protect capital, take it nice and slow, swing a bit. immediate areas of value though. Don't try and swing for 6 months. You'll go crazy. It's not easy, psychologically straining, but take that immediate demand on the daily to the immediate supply on the daily. Immediate demand on H4 to immediate supply on H4. You will see gradual growth. And when you take a loss, you will realize it for yourself that, okay, fine, it is a loss, but it's not affecting my trajectory. You are allowed to lose in the market. It's part of the game. But what you don't want is for your losses to wipe you out. All right. Also, you don't want this incestuous need of short-term thinking, always withdrawing profits, right? So you'll never get to a stage where you can actually live off your account, right? You have to feed your account. There's one account where, you know, after I done the ITPM and I was so shocked, right, at how these big American guys do it. It's not enough that they're already good traders. It's not enough that their accounts are quite big. They also use other sources of income. They own businesses, retail, real estate, blah, blah, blah. And they take money from those businesses to keep buffering their accounts. So they keep adding cash into the accounts while they're using the markets to grow the accounts. And why? Because you want to get to a place where you can comfortably use a comfortable lot size and still let it be 5, 3, 1, 2% and still be a sizable you know, returns, right? You know, if I say risk only 1% of $100, your account will never grow because you're literally trading at $1 at 0.01 all the time. So the issue first, traders, is we need to get this thing growing. This thing called capital has to grow. Protect it from you sometimes. Protect capital from yourself sometimes, all right? So just remember that kind of stuff. Okay, time is not on our side, but guys, I'm almost done. I want to talk to you guys about leverage. That's the last thing on that PDF that we need to do today to conclude module 1. Now, I'm assuming this stuff is digestible. Some of you have traded before, so it's easy, it's understandable. Some of you have never, so I have to do it properly. So you'll forgive me. But if you've done it before and you traded before, I'll suggest you actually listen to how I approach this thing as well. From your experience, what's the average time taken to grow $100 account? Mr. Kakoma, there's going to be a 1 hour to 2 hour class I'm going to do with you, basically called How to Grow a Small Account. In my experience, with grow it by to what amount? Maybe let me start off with that type of question, because that's going to determine a factor. Avoid this as well, by the way. Avoid dollar goals. Dollar goals won't help you. You can have one in affirmation, but avoid dollar goals in your trading account. Mr. Kakoma, just give me a better scenario, buddy. Grow from $100 to what? Would you advise someone who's never traded before to begin with 1,000 or rather 100 to 1,000? Okay, cool. Two good questions there. Wongi, there's a guy called Ronald in the private Telegram group, and he's the guy who created this interesting term that I still today love so much. He called it a live demo account. And what he did with the live demo account is after he did the course, he went and put in $100 and he just went crazy, followed the rules, broke the rules, followed the rules, broke the rules. And he came back to the group back then on WhatsApp and gave feedback. And I was able to grow this to about $540. Ask him, Margs or Ronald or something, he's in the group there. And then he managed to also blow it, right? He did other weird things. It's just like, he came and said, look, man, the rules are fantastic. The rules work. I can grow an account. But a live demo is basically a tester. That's how I thought he meant it. Like, get a live account, but put small money in a live account to test yourself, to test, you know, the rules, to test your understanding of the rules. I do think if you're in a place where you can afford to start off with $1,000 that you don't for now, all right? And it's kind of contradictory. You want to start off with something like $250. I think $250 is healthy. $100 if you're very patient. Remembering my rules for 5% is 0.01. So you will always see small gains because you're using a small lot size, but you can't use a big lot size because you're using small capital, right? It's a double-edged sword. So you must just simply wait until you've got enough capital to use big lot size. But there is a lot of brilliant lessons in using small capital and slow lot size, because I want you to develop a trader's process. Learn to trade my real money. Learn to lose real money. Understand yourself in winning and losing real money. And the losses of real money at 0.01, 0.02, whereas you're still going through your second learning process. Now, you've done the course theoretically, now you're dipping your waters in the market. The course here, or the trader's process, will teach you a lot about yourself, but also a lot about the market, right? It's different when you lose $20 versus losing $2,000. It's your first time in the market. The $2,000 will knock you out. The $2,000 might require you to see a psychologist because you just hate the markets now. The $20 is like, okay, damn, that sucks. Let's do it again. I made $15 the other day. I'm pretty sure I can recover from this, right? And while you're doing that, you're simply developing a trader's process. You are not trading to become a millionaire. I don't do stuff like that. I don't make millions in a day or over a night, and I don't teach people that nonsense. In fact, I want this. I like this, right? It tests who you are, right? Imagine this, because you're going to be faced with this. I promise you, you're going to see a valid demand. It's going to meet all the rules, everything. You're like, you know what? There's no ways this thing is going to fail. It's a perfect multiple time frame analysis. And you're going to have $200. And you'll be like, if Lira was in front of me, I'd have to do 0.02, but it's not in front of me. Let me go 0.05, which is what? 5% technically of about $500, right? You are just going to increase it because after all, you are so sure, you know price is going to go, and price goes up your way, and your $200 is dancing now. You've just jumped from 200 to 380. You're like, whoa, money come. The supply is there on the daily time frame. You're going to exit here. You are right there. What are you doing now? Fall into euphoria trap. Euphoria sets in. You start opening more lot sizes here. Why? Because after all, I already know where price is going. Price moves from supply to demand, demand to supply. That's what Leroy said. You've seen it, done it many times. Let me keep adding more lot sizes. Even if you don't add lot sizes, the same force in martial arts in Tai Chi that you use to push forward can easily be the same force used against you. Now you're in trouble because you're facing margin calls. Now you're in trouble because now that 380 is gone and that 200 is now looking like $80 left in the reserves as price is going negative and approaching a stop loss, or price just enters your area of value for a retest and you just could not survive this pullback. When it went negative, it was negative 100. What did you do? You closed, you panicked. You're like, oh my God, I was wrong. You panic. Now you kill your capital, $100, and then price goes your way, all right? So all of this literally will play. Yes, exactly, Trevor. It plays on your psychology. It really works you out, guys. Trading is like a different level of chess. Like if you ever play chess, which I absolutely love. And if I'm in your city, let me know and I'll take you out for breakfast and we play chess. Just what I love to do when I travel and I meet students, those who play chess anyways, right? It's a different type of a chess game. These guys know that you're trying to flip an account. That's what it's called. You get traders who are always trying to double an account overnight. Do you know what banks aim for per month? Do you know what banks aim for per month? Generally speaking, 10%. Do you understand that? Do you know a bank will have 100,000, blah, and they just want to grow it by 10%. If they get 10%, that's a good month. That's brilliant. Retail traders, do you know what retail traders want? 100%. Right? So what you want to do is to avoid all these silly traps and design yourself a trader's process. If you can afford it, start off with 250. It's sizable. You can actually feel the growth quickly. Right? Kakoma, $100, generally speaking, works this way. All right. And I'll do this properly with you in module 2. So please note there's still a class that we need to do called How to Grow a Small Account. $100 to me in week 1 and week 2 will start to look like $200 in the first 2 weeks of trading. All right, and it can be in the first week. Honestly, it can be in a couple of days if you've got a good swing and there's a lot of volatility and you hold, right? It can be in a week, but generally speaking, let's say week 2, and maybe there might be bumps and ups and downs and a tight stop loss here that kicked you out and a tight stop loss there that kicked you out, right? All those things are very much possible, but generally speaking, that's what it looks like. And then, on week 2, week 3, you look, by your first month, you should be about $400. And the reason for that is your lot sizes are small. And there's nothing wrong with that. You're playing at 0.01 for every $100 in your account. So obviously, if you start off a little bit more juiced, right? Your lot size is more juiced, right? Bearing in mind, keep it at 5%, then your results are more juice. But this is a good process because in here, I promise you, it looks like it's more. It looks like it's like a lot of things. It's like a small account. I can't believe I made $400 after a month. If you open your broker platform before 365, you've been trading before, especially those who've been trading before. Go to the last month you traded before joining 365. Go to your MT4, MT5, go to your calendar and ask it to download the results of 1 month worth of trading. You will find the most ridiculous things on retail trade accounts. You'll see it'll say 157 trades were taken in 30 days. I always go crazy and wonder why I'm torturing myself in a mentorship program and asking people to send me their broker statements. Because some broker statements are this thick, right? Because traders are just buying, selling, buying, selling, buying, selling, buying, selling, and they're making $1 here, losing $5, making 30 cents, losing $6, making $10, losing $50, right? And at the end of the day, there's so many trades that were opened in that month, but there's no direction in the account. The reality is perfect setups don't show up every day. Perfect setups don't show up on every intraday time frame, right? Once in a while, markets have to trend. Even on the 1 hour time frame, there's that one demand that's in control, and it might be in control for 2-3 days, right? At least come to an H4 supply, right? During those 2-3 days, there's really no area of value to enter. You have to wait for the supply. If you're still that trader who can find a trade all the time, every day, in and out in the market, you are going to have this type of setup, right? Your fluctuation graph, when I send it to you, will look like this. It will look like a little kid who scribbled a signature, but eventually it will go down, right? You're guaranteed your overall P&L will hurt. My mentor said to me, I've had the most interesting mentors. I was supposed to keep $1 in my account for 6 months. Make $1, Leroy. That was my process, guys. When I say, I'll repeat that. I've been trading for 6 months. I had I think I started with $150 account after going through blowing many accounts. I had lots of bad habits and I just couldn't stick to the rules because of my terrible trading experience. So then the challenge was fund an account with $100, make $1. The moment, Leroy, you make $1, close the trade, kill the trade. Kill it. Yes, it could give you $20. It could give you $200. I don't care. Make $1. Learn to keep $1. Very few traders can start the year in January with $100 and not refund that account. A tiny percentage of traders, I'll say that again, can start an account with $100. Come December and you ask them, how many times did you refund, refill? How many times did you blow and have to redeposit? The number will shock you because it means people can't keep $1. If you cannot keep $1, you cannot make 100, right? Basics first, okay? So in general, right, and let me just go back to the question I was answering here. You want to make sure you have a trader's process. You've kind of like seen the reality of markets versus the theory of markets. You've seen how you react. You've seen, do you actually have the capacity to calm yourself down, right? When prices are at a negative, but your stop loss hasn't hit. You had a trading plan. You put a stop loss there, it's 5%. Why do you want to close if it's negative? Putting a stop loss in your trade means you accept the risk. It's part of your plan. Cutting the trade before your plan goes into fruition is a problem because 7 out of 8 out of 9 times out of 10, if you're right about your analysis, price is allowed to enter. When I say negative, this is what I mean. Price is allowed to give you negative readings. Let's say there's a demand and you want price to go up. And this is your area of competition, the area where you've entered. The moment price touches your entry point here, you're triggered, right? You want price to go up. Then price creates a nice little candle inside your area of value. All of this, you're in the negative. You're negative 10. You look again, you're negative 20. You go to the 20 to take a poo. You come back, you're in negative 30. Now you're panicking. You're not sure. Is my analysis correct? If you put your stop loss here and you were risk sensitive, then this is the plan. You have agreed to lose 5%. Honor it. If it's a correct analysis, don't hold losses for fun. That's not what I'm saying. I'm saying make sure you've got a good plan, good analysis. If you do, average out. There'll be days where you ding, but if you average out and your analysis on top, this is what you want. Price will eventually start to react to your analysis correctly, guys. Trading, and I'm going so off topic with this, but this is important. I'll tell you right now, is a game of averages. Don't ever let anyone fool you. So with me, it became so dangerous always releasing trading results, because I realized the people who were seeing that stuff and wanting to join the academy thought that's where they were. Remember, again, I was honest with you guys from day one, or from whatever day it is. This is me, and this is not me because I think I'm the dopest or I'm better than everyone. I'm simply saying, based on experience, timing the markets, chart analysis, etc. This is me. I can't be your target. If I'm your target, you psychologically will destroy yourself. There are people in your class right now in group 20, group 21, on the private Telegram group who are already trading live markets. That's your first target. People have done this course. People are starting to get their feet wet. You are here because you've just started. This is not a hierarchical level, right? It's not, oh, these people are better than me. It's just that they got here first before you. This is your target. You want to understand what they're doing wrong now. Right? You want to engage with them now. What rules do they keep forgetting now? So that when you get to that stage where your account is now at $1,000 US, there's a threshold. There's another thing about trading. Some of you will be able to trade $100 accounts easy to 1,000, easy. So this journey can quicken after month one, because fundamentally, if you can get to $500 US in your first month or so, 1,000 is easier because of the lot sizes you're using, especially if you're swing trading, right? It becomes very easy. But how to grow a small account, how to compound that lesson is powerful, because I'll teach you how to use order blocks between order blocks to compound, right? We've spoken about it a bit with other people in module 2, and we will do the same thing for you guys, right? But this is the ladder. A lot of you, this part here won't be difficult. There'll be a lot of times where you trip and fall over yourself, etc., while you're still mastering the rules. But this is easy. What's difficult is this. So that's why I have a separate senior traders program. When people break this number is so psychological. I don't know why. When you finally get your first 5-figure account, the stakes are high. It's weird. So that's why to join the 365 Senior Traders Program, you don't pay anything. All you have to do is to give me and my team your broker statement, and we assess, did you follow the rules to grow this account, or were you just using big lot sizes? I want people who have gone through a process of steadily growing. Steadily growing. All right, there's the capital size, there's the lot size. I gotta grow with it, because if you followed the process, I now know that even though you're about to enter a different arena, psychologically, there's a process in there. I'm talking to a trader. Between $1,000, $900, $500, $100 to $10,000. I'm talking to individuals, and there's nothing wrong with that, but there's a for some reason, every single person I've come across in trading and mentoring, there's a psychological break at 10,000, your first 5-figure account. Why? Well, let's start off with 5%, 5% of this account, right? If you to take one trade, 5% of 10,000 means you're using one standard lot size to take the trade. That's number one. We're going to talk about leverage tomorrow, guys, because I'm out of time. All right, it's like a 5-minute chat, and then we'll start our module 2. Okay, I hope that's fine with you, right? But let's end it with this. 5% of 10,000 US means using lot size, a standard lot size, which means for every trade you're trading, you're putting $500 US at risk. You come, if you start off with $100 US, and these are my rules, this is my way of doing it, right? Some people do it differently. Some people are risk aggressive. Some people move faster. I don't. I can't teach you how to move much faster. I didn't do it that way. I can't teach you something I don't know. But remember where you come from. You come from a place where you're risking $5. If you lose $5 today, you'll most likely go to sleep peacefully, right? You won't have nightmares, right? It's just $5 at the end of the day, whatever, right? If you lose $10 on, you're like, okay, you know what? All right, I'm being silly. I'm slow. I should slow something ABC down. I just lost $10. My next trade might be a $30 win. I'll be fine. These guys, when they cross this level here of 5-figure accounts, this is how much, if you're going with the 5% rule, which I generally advise they drop to 3%, 3 to 2%, this is how much is at stake every time you trade, for every single trade, right? So it's not difficult to see someone enter the senior trader program. I've seen this happen a lot of the times. And then within the first 2 to 3 weeks to 1 month, while they're still getting used to this type of money, right, to all of a sudden make a follow-up on them, and boom, there's their account there sitting at anywhere between 7,000 again to 9,000, right? So they've taken 4 losses and they're out of the game already. And they're shaken now because, you know, you don't want to be in a slippery slope, right? Where you make it all the way to the top of the mountain and then you trip and fall and you're so scared that you might have to end up here, right? And then the pressure is on. Do I start to aggressively push back up? I know I can do it, etc., etc. It's a different type of mental game, trading. The difficult thing isn't making profits. You can make profits in trading. Even someone who doesn't know, they can open a trade today, not knowing the trends. And if they're lucky and price goes their way, they can make money. The key, guys, is can you keep $1? And this is it. This is sober mentorship. There's no high-flying nonsense. We'll work through this stuff in module 2. But this is the key thing. Can you keep $1? Can you treat $100 like 10,000? If 10,000 isn't a big deal to you, can you treat $100 like 100,000? Right? I'm using $100 not as a recommendation of starting capital. I'm using $100 as a basis for most reputable brokers will require that as a minimum deposit, right? I prefer people start for $250. It gives you more room to dance, right? When we talk about leverage tomorrow, we will then expand on this part here, guys. I just want to check comments here. I think I should take you up on that. Cheers, breakfast challenge. Okay, Sheila, it's on. Definitely. And I do plan on coming up to Kenya as well. So whoever gets to whoever first, we can do this. I hope I'm ready to lose. I'll tell you this, I trained my little brother and he became the national captain of the chess team in Zimbabwe a few years back. So that's my reputation. Right, but yeah, interesting times. Guys, it's 20 to 9. You know, we've overshot, but I hope you guys enjoyed this. Technically, we've concluded module 1. We do need to kind of like just make sure we're on the same page about that 5% rule. So we're going to be talking about leverage tomorrow, and then I will simply introduce module 2. If you saw with my introduction to module 1, introductory lectures are just short by design, right? It's a very short class, just telling you what we're going to be talking about, how it works. So we can definitely abuse that class and really finish this leverage conversation. But shake my hand, guys. It's been an awesome journey with you guys for the last 4 weeks. I hope you guys have been taking on to this thing. I've thoroughly enjoyed you guys as a group. I have not even advertised to a single soul that we're taking classes next week, Tuesday. So I might not even have an intake, right? Which will free me up for a lot of things. But if people are interested in taking classes, I will answer the call. But yeah, we shall see, right? And it won't affect your classes. Don't worry, I'll tell you how module 2 works tomorrow. So don't panic, Sheila. I'm not going to drop you. I'm not disappearing. Everyone else as usual. I'm with you until we finish. All right, I'm with you until you finish. Guys, have a good night. Have a good night. I hope you were with me tonight. I didn't even do a temperature check tonight, but I think everything was, you know, simple to follow. All right, have a good night, everybody. See you tomorrow. Goodbye. I'm stopping the recording. Thank you, Wongi. Cheers. Cheers, David. You're okay. Fantastic. Thank you, buddy. Cheers, Trevor. Cheers, Mr. Kakoma. A pleasure.